Hello and welcome back to the Geordie Pig Investor channel. Today I have got a huge milestone video for you to watch. It is my portfolio passing the £15,000 invested total mark and nearing over 15.5, close to £16,000 in total portfolio value. This was a target that I initially had set out to hopefully hit midway through the year. So that would be looking at around about June. And I've been able to do it by the back end of April, which is really good to see. And considering I only started this portfolio 8 months ago, I'm really happy with the progress it's made. Not only the progress I've made with the portfolio, but I'm really happy with the current positions I've got in my portfolio. I feel like I've researched the positions and I have good knowledge about a lot of my positions, if not all of them. And I'm confident in the positions I currently hold. And a lot of them, if not all of them again, are my long-term holds now, where I see myself holding these stocks for the very long term. And I will not be selling unless there is some sort of change to their earning reports or potential dividend payments. And I just feel like I've got a really good balance between really good dividend paying stocks currently and then also my dividend growth stocks, which is what is the main part of the portfolio. So what I'm going to do today is take you through the portfolio, where the £15,000 is invested, and we can have a little look and see how the journey has unfolded thus far. So if you have a little look back, I started this journey on the 24th of August. I made my first initial payment of £600 into the portfolio. When I made this initial payment, I had around about £2,000 saved up for my investing journey, and I already had my emergency fund saved up, which I've been saving all year long before starting this, as I believe that is a really important first step. And I'd also done a little bit of research. I'd bought a couple of books to have a look into ETFs specifically, as I knew that was the route I was going to want to take to start off with, alongside buying some dividend books and looking into potential dividend growth stocks. I feel very fortunate I did this, because if I hadn't done, I may have got caught up in dividend yield traps and lost a lot of money to start with. But instead of that, I was very sensible, purchased some good dividend long-term growing stocks from the off alongside some ETFs, and we can see my portfolio started off slightly in the green. So you can see I was just adding every single week. My initial goal was to start adding £200 per week, because I had that little bit of a pot saved up. I knew that for the next few weeks until my next payday, I was able to continue to invest at least £200 a week. And the weeks I had a little bit more money, I was then investing over this amount. On top of this, I was working a second job at the time, which I still currently do. We can see my portfolio was in the green, like I say, for the first couple of weeks, and then it dipped into the red after sort of the first couple of months, but very small amounts in the red, only down sort of 2%. I'd really started researching into different stocks and how the stock market worked. I knew that red was never always a bad thing, and it just meant buying more of these current stocks if I believed in the stocks and I was able to actually turn that into a profit. So that's exactly what I did. I continued to dollar cost average into my ETFs, and alongside dollar cost averaging into my ETFs, I was buying individual stocks that I felt were at a good price at the time. Now, obviously, the first few months, it was still a massive learning curve, and I did buy out and sell out of a lot of different stocks while I was still sort of finding my feet, but I do believe I made some good purchases and sales as well, as after my first couple of months, I was up around about £50 from buys and sells, alongside holding pretty much 80% of the initial stocks I had purchased for my portfolio. We can then see as it was closing into December, I was really starting to ramp up the amount I was investing, and I was able to continue to do this £200 a week every single week minimum ever since starting. So I can proudly say I've done that ever since the first week, and I'm still doing that right now, and I'm in a position where I can fortunately continue to do that with the money that's currently coming in. I would say I live quite a frugal life though, so a lot of people ask, how do I save up so much and invest so much into my portfolio? Well, to be honest, I do save up a lot of my money, and I would say I'm on the more frugal side. I try and be pretty cautious with my money and try and make sure to save first before I spend. So I like that rule, because it means it's paying yourself first before you actually pay anybody else. Obviously, I've got my main bills that come out. I am also a homeowner, and I have been for nearly 3 years now. So I purchased my house just under 3 years ago by myself, and I am a sole homeowner. So I do have all my bills to pay and my mortgage, but I know what that amounts to every month. I have spreadsheets on all of it, and I know what is left over. And from the money that's left over, that is the money that I like to pay myself first with. And as I know, this is going to pay off in the long term, and I'll reap the rewards over the next 10, 15, 20, 30 years when I'm hopefully retired or work optional by this point. If we keep looking at the portfolio, you can see through January I continue to invest pretty heavily, and we can see my portfolio started to peak at its highest return rate into March as it started reaching 5%, and then towards the back end of March it was actually up towards 7%, which was the best returns I had received on the portfolio. Since then it took a dip in April, so this last month it is back up at around about 5.5% returns, which I'm really happy with, to be honest. And again, like I say, I'm a long-term investor, so I love to drill this point home. You probably hear it off me every single video, but I'm not so bothered about the short-term returns in my portfolio. I do my stock analysis videos and I analyze every stock and make sure that I am buying at a price that I'm happy to pay, and if that stock then dips further from that price, I know that I am getting in at a price that I'm comfortable to pay and it is likely long-term to make me a profit. And if it doesn't, I know that it's a stock that has good fundamentals, is likely to last a long time, and will also pay me that great dividend. And that is what I found so motivating about being a dividend investor. If you haven't watched my most recent portfolio update as well, I have also hit my yearly goal of £500 a year in dividend income. That is what I will now receive over the next 12 months as I look to continue to build on this and turn that into £600, then £700, and hopefully close in on that £1,000 a year mark. You can see right now I am up over £800 on the portfolio, and I've actually had over £100 in dividend payments received already as well, alongside around about £80 after paying taxes and deductions in portfolio gains from buying and selling of stocks. So I've had some successful buys and sells as well within the portfolio. So now we'll look through the portfolio. I have actually added a few more positions. It's a little bit on the bigger side, being I think now 37 positions, but out of the 37 positions, I think I only have 6 which are in the red, and I'm just really comfortable with the positions I've currently bought into. A lot being now UK focused. I think there's nearly 2/3 that are in the UK compared to just a third which is in America, which again, for being a dividend investor and knowing that these dividends are so reliable in the UK, and I'm scoping out really good long-term dividend growth stocks within the UK at fair or good value, I am very comfortable to continue to add these positions. But I also do still like to have the American stocks in there, as I believe the capital appreciation is usually going to be better long-term with these, and there is just some really good American stocks out there. So to start off, we do have Ultra, which is an American stock. We've then got Apple, which is one of my stocks, which is in the red. We've got AstraZeneca, which has had a massive spike as of late and is one of my biggest performers so far, being up nearly 20%, over £80. We've then got BAE Systems up over 26%. We've then got a couple of our red positions, which are UK stocks, which I've actually just bought into more of, which is British American Tobacco, which pays such a good dividend. It is down slightly at 1%. And then we've got Burberry, which is down 6% currently, which is my worst position in the entire portfolio. So pretty good going to only be having 2 positions in the entire portfolio, which are above 4% in the negative. We've then got some big gains in Caterpillar, Chevron, Cranswick, and have another slight red one, which is in Diageo, which is just down only 2.5%. We've then got a couple of newer positions I've opened up as of lately, which I bought 1 share of Games Workshop. We've then got Greencoat UK Wind, which again is one that's just slightly in the green. We've then got Greggs, which I've also just recently purchased into, which is basically just level. We've got GSK, which is pretty much level as well. Halion up 3%. One of my ETFs, which I've actually purchased quite a lot of this week because it had a nice little dip, which is EQQ, which is still up over 6%. We've then got Legal & General, which has took a massive dive as of late, and we can see over the last month it's now down 8%. I haven't bought into this stock for a long time, and I'm actually still up 9% on the position, but it's starting to get back down towards that healthier range, which I'm happy to pay into. I like the price at around about $2.20 for Legal & General. It is again a really reliable long-term dividend growth pair within the UK. So if it dips that a little bit further, I may potentially look to add back into this position, which I kind of hope it does, because my position in there is now on the smaller side. When I did add to my stock in there, it was actually one of my bigger positions, so it just shows how much my portfolio has grown since then. We've then got MasterCard, which is basically level, Microsoft, National Grid, Realty Income, Rio Tinto, SafeStore, Sage, Scottish Mortgage Investment Trust, and Shell, all in the green. We've then got Starbucks, which is also basically flatline now. It was actually down around about 5% a couple of weeks ago, but I just continue to buy into it as I just believe under $90 is such great value for it. You can see my average price is now just slightly above that $90 mark. So I'm hoping I can actually get it down below that before the price actually creeps back up over that mark, as I believe it will do. I recently sold out of some of my Savannah Platinum position here. I made quite a nice little profit on this position here. So we can see I sold out of 190 shares. That was actually earlier today, and it was for a realized profit of £27, up 30% on the rest of the position. So I sold out half of my position there. We've then got Tesco's, which is in the green, Texas Instruments in the green, Texas Roadhouse in the green, United Utilities in the green, Vanguard FTSE All-Wood in the green, Vanguard S&P 500 in the green, Visa and Waste Management all in the green, and Vici Property was in the green there, but it's literally just ticked over into the red, but it is literally down 0.1%. And again, such a good dividend payer, really good fundamentals, and I've already done a stock analysis on them, and you know how I feel about Vici Properties being the biggest position in my entire portfolio. This is the entire portfolio. Like I say, we've now got that magical £15,000 invested mark. I can continue to add to my positions and find good value, then I can creep it up towards that £25,000 mark, and then we will start seeing the snowball effect take place. Regardless, I always dollar cost average into my ETFs every single week. I have £100 that goes in there every single week into my 3 main ETFs. And on top of that, I have actually been putting more in there. The last few weeks I've been putting £200-300 in there because they have been dipping. And I'm very, very happy to buy into the S&P, the EQQ and the FTSE All World while they are on dips, because I believe long term, as always, the ETFs will skyrocket. So that's the portfolio. I'm just really happy with how it's going. How's your portfolio going? What value is your portfolio currently at? Have you got goals for the end of 2024? Let me know in the comment section down below. I hope you enjoyed the video today. Please like and subscribe. And this is the Geordie Pig Investor, over and out.